Hello, I'm Jeremy Allaire, and this is The Money Movement, a show where we explore the issues and ideas driving this brave new world of digital currency and blockchains. This week, we're going to be focused on what I'm calling the stablecoin trade. The stablecoin trade is sort of looking at this world of stablecoins through the lens of really where they came from, which was trading in crypto markets. The history of stablecoins, their role in these digital asset and crypto markets, how they've evolved, their current evolution, and then obviously kind of where they're going, the broadening role, what all that looks like. And very excited this week to help us navigate this and talk through this. We're joined by Dan Matuszewski. Just a little bit of background. I know Dan from having worked together for years building Circle Trade. But Dan is someone who has really been in these crypto markets really as long as anyone, truly one of the OGs in trading in this space. Dan has probably held and traded more stablecoins than almost anyone in the world, and has obviously witnessed their explosive growth. And so he's going to be giving us tremendous perspective and experience. Welcome, Dan.
Welcome.
Yeah,
nice for having me. Yeah,
absolutely. It's great to see.
I like your dome thingy in the corner.
It's
geodesic dome. It's nice.
Yeah, it's alluding to a few things, and yeah, it's good. Thanks, man. Awesome. So, look, we got a ton we want to cover, and we'll get to all that, but I just think it's always fun. I want to have you just share a little bit of your history, your story. How did you arrive into crypto? When did you arrive in crypto? Why did you think it was going to change the world? What brought you here?
Yeah, fair. So to be fair, I didn't think it was going to change the world when I first got into it. I was working at a hedge fund called Bay Hill Capital, which is about 45 minutes south of Boston. Kind of in the middle of nowhere, was trading equity options. So basically S&P 500 names, like all the options that are on that. And we had a vol product that we had sort of built around it. So that was my job at the time. And I had found out about crypto, and crypto was just Bitcoin, right? That was the whole game then. Probably through, I think it was one of those crazy anarchist blogs, probably Zero Hedge. It was sort of a known thing, right? It lived in the fringes of markets, and people knew about it. And it had gotten a lot of color in sort of the larger financial world when it hit $1 and then when it hit $10. So we knew sort of about it. But there was an exchange called Bitfloor, which was in New York, that blew up, right? And Roman went to work at GDEX. There's the whole history of that thing. But they had a maker-taker exchange model, so you got paid to provide liquidity. And at the time, at the fund I was at, I was specifically dealing with the hedging of the options, so trading the stock throughout the day to sort of do that. So I'd gotten very into sort of the lower level trading activity, with the markets. I was good, dealing with routing and different order types. And I was all right, well, this crypto thing is small. I can trade it because there's no conflict of anything I'm doing in my day job. And maybe I can make a little money doing it. And that was really how I got started with it.
Turned out okay.
Yeah, no, don't get me wrong. It worked too. But I didn't know a ton about Bitcoin before I started trading it, right? I was all right, well, you can send it. I don't know. I kind of get the thesis. And then you just go down that rabbit hole, right? Then you're well, what is mining? And then you inevitably lose money trying to be a miner. And then you try to figure out, well, maybe I can move it to this exchange and do this arb. So that was the gateway drug in sort of all the larger crypto thing. And then I just jumped in full time because Kraken raised some money. I'd gotten to know Jesse because I was doing a lot of the volume on Kraken at the time, a significant amount. It was very small. The whole exchange was only doing a tiny amount. I was a portion of it. And then I was all right, well, if I'm going to really do this, there's only a couple places that make sense right now. And the exchange is the clear business model. So you're either a miner or you were sort of a developer for one of the software providers, or you were working at one of the exchanges. And that's still kind of true to this day in the sense that the exchanges are the big business that generates all the revenue in the industry. So I went to work for Kraken, was there 6 months. You guys raised money at the time with your Series A. I was living in Boston still. You guys were like down the street from me. You were in 4 Point. I was over on Jew
Oh, I
Street.
remember.
Yeah, and I shot a cold email in and sort of got to know you guys, and then inevitably like made my way over, and then obviously worked Circle, traded that, built that desk out over like the time, and then now I work with Bobby Cho, Dear W, Julian, who was with us at Circle at the end, and then we're just basically trading the equivalent of what like a hedge fund strategy would be, but using principal capital currently. So that's like, so, but I've been doing it now 8 years going on. So I've seen some things and some iterations.
Yeah. You know where the bodies are buried.
Some of them.
So actually, so just on the origin story, as we say, like, I remember when we first met, and, you know, we obviously were, you know, we were all fired up about like, hey, look, this digital currency thing is actually going to become like the way that the payment system works. It's going to be like the way that value moves around, and how do we like take fiat, make it digital currency? How do we do all this sort of stuff? And I think obviously for you were more focused on like, hey, look, there's this great opportunity to trade Bitcoin, and this is in Boston, and this is a good group of people, and all of that. But like back in the early days, there was sort of like the crypto macro thesis. Like by definition, like Bitcoin itself is a macro thesis, right? You know, how early on did you actually buy into the, let's just say like the long thesis, the long kind of global macro thesis that says like the world's going to go to shit, and this is you know, going to grow as a store of value?
Probably way later, but what I will say is the guy who started Bay Hill, this guy Alec, was like the main trader in the euro dollar option pit way back in the day in Chicago, right? So, but he was there when the euro got created, right? He's like, I remember him saying this. He's like, look, like I've seen the birth of a currency, and he's like, I've seen how this like all kind of plays out and like what has to happen. He's like, all I know is if this is going to work out, this thing has to go up tremendously in value. He's like, it just like, this doesn't make any sense, like where it is currently. He's like, it's either going to be a zero or this thing's got to go up much higher. So I will say the first time I really thought it could be very large is when he started like advocating the possibility of it. And then you just handicap it. You're like, all right, well, I think it's got this chance of getting there maybe, which is like an impossible task. But like you start to get the idea of like, all right, well, anyway, the baseline's got to go. I don't think I really started seeing it as like a true form of like value storage, or even like this greater idea that like this is like sort of the maybe end result of like where money sort of has to go, until way later, like 2015, 2016, where you started seeing material amounts of it in dollar terms being like kept by counterparties. And then specifically like stuff out of Asia, where we would like see people that were sort of like only like crypto native, right? Like they just lived, their entire sort of balance sheet was constructed out of it. And that was like, I was like, all right, well, there's like really people that are like doing this, like this is going to like work. And there's like a trend there. But like when it was smaller, like I was not buying that thesis yet for a bit.
Yeah. I've always believed it.
No, I mean, like, look, it's right. Like, or it's much more likely to be right now than it was like at that time.
So this actually, it's a good segue, right? So 2015, 2016, people in Asia, you know, moving to Bitcoin, right? And basically like a relatively unfriendly environment in Asia for like getting dollars in and out of these exchanges that are over there. And so, you know, Tether is born. And it's sort of born out of a need out of Asia more than anything else. And, you know, I want to get into Tether in a minute and talk about that separately, but just like, you know, you saw the birth of stablecoins, and there were a few different attempts at this in the very early stages, the first stages. So like as a trader, when these like very first emerged, what did you think?
Well, Tether, like when it first emerged, wasn't really that useful from what I remember. Like it was around, but like nobody was paying it any mind. It really started to get big when Bitfinex lost their banking in Taiwan, because they had like a couple Taiwanese banks that they used, and they had a ton of activity flowing through there. So you could generally interface dollars to trade Bitcoin in Asia via that vehicle. So like that wasn't like and people could keep dollars there too, right? Like that, like, there wasn't a huge people like to I think talk about this capital flight scenario of like people trying to get dollars like out of Asia. But like most of the like demand driven side for like Tether was like speculative trading activity,
early
especially
on,
back then, right?
Early on.
In the early days, right? So once Bitfinex got jammed up on the banking side and started to move more into like the Tether denominated stuff, that was when it like started to become really useful. And that shoehorned people into it, right? Because they were like, all right, well, now I'm dealing with it anyway. So like I can use it other places. And what you started to see was smaller exchanges that were trying to set up couldn't or wouldn't get banking. Like it's hard, right? Like you know this. Like
absolutely.
it's a monster, and it's like just a huge regulatory battle and like such a heavy headache in the gate that they're like, all right, well, we can just bootstrap this with like using Tether. And that's really like what happened. Is like people were like, well, you can either go get a bank and get a full compliance department to handle that, or you can just like slap Tether on it. It's like and kind of live in the gray.
It was crypto shadow banking, sort of, you know, to for a lot of different market participants to sort of get on these rails. But I think obviously people figured out like, wait a minute, like these dollars move fast, relatively speaking. And if I'm a trader, right, like if I can go across exchanges, I don't have to like be like holding like working capital in all these places and getting credit lines in all these places. And like, I mean, you still might want to do that, but like just in terms of, you know, as venues grew, which like 2017, right, was like this really significant kind of growth in venues and diversification of that, obviously continued. Like the utility value kind of kicked in from a trader perspective, I think, right?
Yeah, well, so like once you started using it, you're like, this is pretty useful, right? And like everybody sort of has that, depending on how like early you needed to be forced into it. Obviously, like if you couldn't like secure or keep your own banking, you got pretty comfortable with it pretty fast. And like there's also this sort of size thing, right? Like once Tether got to a certain size, people became a lot more comfortable with it because like the risk associated with it seems to like come much less. And also as it starts to be like taken on more venues, it's liquid OTC, it's like liquid on screens, like you become much more comfortable with it as an asset that you're sort of holding. Tether is unique in the sense that Tether prices as a risk asset as opposed to, well, and like DAI too, but like Tether really of the dollar-based stablecoins. Because like USDC is just a dollar, right? Like you just like move in and out. You don't think about it.
Thankfully.
But like, but like Tether has a history of like moving and like that matters. And like the more it stays close to the peg and the more that's like on it, like that's like the bigger deal.
Yeah. Yeah. So I think, you know, for a lot of people who are, you know, kind of looking at this for the first time, they're like, why would anyone ever, you know, want to rely on something like that when it's like, you know, we don't even know what's there. We don't even know what the assets are. Like, you know, it turned out actually like the assets were a mixed bag, still kind of are. But people didn't care.
Yeah, I mean, they definitely don't. Like they're willing to like tolerate a lot of sort of like non-optimal transparency on it. And I think the reason for that is because there's enough market participants that can create and redeem it at $1 that it just like stays pretty tightly wound to that peg now. So it doesn't matter if you can't directly sort of arb it back to $1, as long as there's people that can, and it keeps clearly being like kept in line. People are like less concerned with it, right? Like it's good enough and it's like taken everywhere. So I don't know. So, I don't see that changing unless there's a material regulatory action that like forces people to like rethink that risk.
Yeah. Well, we'll come around to that in a few minutes. I'm going to talk about like the kind of where we are today and where we're going. But just in this space, just because we're kind of going through like a little bit of history here. So obviously this is that's sort of the first kind of, you know, liquid dollar stablecoin that has been out there. You have like these crypto collateralized, you know, projects, and there've been a bunch of those over the years, but sort of, you know, DAI sort of being the most prominent one. You know, how do you look at that category? And we'll get to USDC in a second, but how do you look at that category as a trader specifically?
Yeah. So the problem, not that there's a problem with DAI, like the issue with using it as opposed to the dollar ones is like, it's much more likely that DAI is going to trade away from its peg than anything else, just because like the creation and redemption mechanisms to like keep it in line are like less robust than you're going to have for say Tether or USDC, right? Like those are just going to get smashed in line so much farther. And the other like always lingering risk with that stuff is that like there's still unknowns like in that like smart contracts. Like we saw this in the crash in March, right? where they liquidated a bunch of CDPs at zero or whatever it was. It's like there's still some like bugs that have to get like shook out of this thing, as opposed to like look, Tether and USDC, like you just put dollars in the bank, they give you the tokens, and like it's somewhat centralized, so you can trust it a little bit more so than some like decentralized system where like, yeah, we don't entirely know how this thing's gonna like work on like a certain stress test. It's like that's the big issue I think that have. That being said, though, DAI is the most censorship resistant stablecoin dollar that you have out there. So like that has some value to it.
Yeah. You have the spectrum of censorship resistance, and then you have like, you know, at the other end, like something that's like regulated, audited, compliant, like, you know, exactly what it is, and it's under a regime and supervised and all that stuff, which is sort of where USDC is. But I think like the key concept here though is specifically as a trader, specifically in what I call the crypto capital markets, like the market infrastructure layer, the dollar market infrastructure layer, like it obviously, you know, from a trader perspective, you need that redeemability, and it needs to be redeemable into actual like bank accounts.
It's got to be liquid and useful. Yeah, I mean, like we don't do a ton of business in DAI. We do, but like we're using DAI usually if it's like a last resort, if we're like able to use Tether or USDC. Like that's just how we're gonna like operate like first.
Yep. Cool. So yeah, I guess, you know, related to that, obviously you were working closely with us as we launched USDC, and kind of had the construct of Center, and, you know, this, as you know, like, you know, our vision has been, you know, how do you actually create a standard for like fiat digital currency, and like a standard that like creates interoperability that eventually is used for payment and settlement really broadly among like, you know, all the leading fintech wallets, digital wallets. Like it ultimately becomes like an actual medium of exchange outside of trading. But at the same time, right, as we know, like the bootstrap use case, you know, for USDC has been trading. So maybe just talk a little bit about, you know, your view on sort of the, you know, a little bit of the origin of USDC, because you had a front row seat and you were helping, you know, create those markets, right? A little bit of on the origin there, and then you know, I think we'll move into like the kind of where it's headed thing.
Yeah, remember it was like a race. Like everybody knew there was like the PAX product, there was the GUSD, and there was USDC, and like everybody, because like you would hear it sort of ripplings between like all the regulators, like all what was going on, and like we all knew they were like coming down the pipe, but it was like, all right, like who's gonna hit it first? Who's gonna have the product? Like who's gonna have like the iteration of it? Yeah. So I mean, look, like Tether had a bunch of shocks in it, right? Where it depegged, it like would trade down to like 80 cents, or it would trade up like rich a couple percent. So there was a need in the market, or at least a perceived need in the market, for a much more pegged stablecoin out there that would in effect have to be, not have to, but likely be much more regulated, compliant, and like sort of the version of those like a whole second iteration of stablecoins that you saw come out there. And I think that was what really drove the market demand for it. And like the idea was that your balances in your exchanges that you like natively face your bank accounts with anyway should just be a stable coin, and that should be like a seamless thing. Like there shouldn't be this concept that these dollars are any different if you can just like move around. And that's like super useful. Like it's an extremely powerful thing. Like as a trader in this ecosystem, like we kind of just live in stable coins anyway. Like we try to avoid going back and forth to our bank, because money that's kept in the bank is generally less useful than money we have like actionability towards. Also, the interest rates in crypto are just massively better than you're ever going to have in your bank account anyway. Like, yeah, you're taking risk on it, but like dollars are effectively $7 anyway half the time. So like,
so you basically have like today, well, you know, take the leading dollar stablecoins and how they can be deployed, right? You basically have like a payment system that works everywhere in the world with final instant irreversible settlement in like minutes, with like very high security, with very low cost, relatively speaking. And so that's great from a trading perspective, right? Just like executing with that. But then you actually have like these new like capital markets, like debt markets that effectively have been created in an institutional setting and a retail setting. Like you have like the retail versions of it, and the people who pile into the retail versions of it on exchanges and other DeFi and stuff. And then you have like actual institutional demand for borrowing against this. And like, these are basically these are internet credit markets that now exist in digital dollars, and they're obviously, delivering attractive yield. We're doing stuff in that now too.
Right. So I think it's important to know, like, the main reason that there's like a very, very high implied interest rate with all of like the dollar sort of products that exist in DeFi, but even like the bilateral stuff you see with the lenders, is because there's an incredible demand for leverage from the mostly retail user base that's trading crypto, right?
Yeah.
And like you see this largest in the implied interest rate via the futures curve. Like the fact that a September delivery of Bitcoin trades at a pretty nice premium to the current spot price. So you can just buy spot, sell future, and collect that difference, but you need cash in order to do that, right? So you get this like lending rate that like works its way out. It's very high right now because like the market's been running up. It's something like 20% for ETH, which is a dollar rate. So you can lend your dollars out for sort of 4% just to September. Which is crazy time. Right. But like that trickles into like people looking to borrow, right? So if I can go borrow $50 million at 4% or 5%, like that's great for me, right? Because I'm gonna like net 4 times that over like the same time frame. So like that's what draws the trading entities into like borrowing a ton of money, and then like that sucks like sort of the money back into like the stablecoin sort of ecosystem. Right. So like that's the cycle as I see it like sort of playing out.
Right, and you're seeing effectively that's like, people are staying sticky in the stablecoins, circulation grows. It's getting deployed and cycled, as it were, in these different kind of strategies.
Yeah, it stays, right? Like you get the money in, and then like it just doesn't tend to go the other way as much.
Yeah.
So I mean, we've seen big destruction of like stable coins like throughout history and like bear markets and stuff, but like the net is clearly like up in the direction of get more money in this ecosystem.
Yeah, absolutely. So like obviously from a trading, like these sort of trading markets, these like lending markets, like these are obviously, big pieces, but I think like today we're certainly seeing, we have a front row seat on this, but like people are starting to discover that this stuff is actually useful for payments and settlement. This is, you can actually, whether you're a business or you're an individual or you're someone who lives in somewhere where you'd rather have dollars, like there's all of these places where people are saying, hey, these are actually, like dollars are a good store of value. These digital dollars are actually even a better store of value because they're sort of self-sovereign and you can do, sort of have the utility value of the internet. But sort of, this sort of transition from market infrastructure into payment system, like that's obviously like, that's, from our perspective, like that's the long thesis. And, there's all this noise around this stuff around the world with like CBDC and, our stablecoins, private sector stablecoins going to be, effectively like permitted as payment systems in the West and the US and so on. What are you thinking on the sort of this jump from like markets infrastructure to actual like payments infrastructure?
Yeah, so I'll say we probably don't have the ground zero look at it, but from what we get told anecdotally from the people that are on the large side, so you got to realize like the stablecoin markets, like they work in this sort of fashion where you have like large individuals and corporates that will like generate huge blocks of it, and they're selling it to secondary brokers who are then like sort of the end middlemen that like distribute it everywhere. So there's like kind of this network that's built. And like we tend to only know the people that play in like the larger sort of ticket realm. But what we hear is that specifically like over the course of this year is that there's been like a pretty large demand for dollars in a lot of like regions where it's either like it's either hard to hold dollars like structurally, or they can't, or if they can, they're worried about like seizure and or like risk of that money like sort of sitting in accounts that like are visible via like So there's this really good for stable coins because like you can just hold them natively to yourself. You don't have to like trust anybody else. There's been a lot of demand from regions like that for people looking for stablecoins. And I think like a lot of people try to push Bitcoin as this narrative of like this store of value. They're like, well, you can hold Bitcoin. And like the reality is people want dollars. They want like stability. Like Bitcoin moves around a ton. And like this idea that like, oh, like you can just keep your wealth in that. It's like people can't do that if it like moves around 50-60% every year and a half. And like, yes, it has generally gone up, but like, what if it didn't over that 8-month period and you needed that money? So
people who have meaningful long-term savings that want to allocate some of that savings into these sort of long-term risk assets, that's a great place for Bitcoin or speculate, right? And then, but for like the average person around the world who's like, I need a now store of value, and that like, I gotta, pay my, pay my expenses and not have, massive depreciation and so on. Like they're looking at things obviously differently.
Right. They're looking for dollars. People, that's what they want. They like want to keep their value in dollars stable, so they ultimately want them. So yeah, that's been the big driver, a lot of the new issuance. Because like, look, all this new issuance clearly isn't going to crypto. Like crypto's having a year, but it's the money getting pushed into the system is orders of magnitude more than we saw in even like 2017.
Yeah. Now we're definitely we're witnessing that firsthand, which is pretty cool. We've talked about it a bunch. Coming back to like regulation. So like there's lots of regulation in the space. All kinds of stuff going on, but like stablecoins basically are now like very much a front and center topic. And, the FSB is, doing this stuff. We've been involved in that. Like there's going to be a global regime around private sector stablecoins, which I think is ultimately a really positive thing, because of essentially what that means is that like G20 and beyond, private sector stablecoins are going to be essentially, a valid payment system, a valid, infrastructure that like you can build financial markets around, that you can build payment systems around, you can do all this stuff around. It's just, there's going to be a bunch of rules around what it is to be an issuer, what it is to, what kind of licensing you need, what kind of, rule set you have to follow, which, we have kind of self-governance around that now through Center, but like there's going to be governance around that, over the next year. Do you think that's like a huge positive? Do you think that negatively affects things like Tether? Like, what do you think happens there?
I think I don't know, because it kind of depends on how they treat it, right? Like there's a bad world in this too, right? Like there's a world where they're like, you have to have travel rule level enforcement of every transaction. And then it's like, does this even work? Like, how can you even like be using this stuff like on chain if everything like, so that's definitely this is going to be terrible. But then the good could be is like, all right, as long as you police the on and the off ramps, everything that happens inside is like fine. And like, I don't know where that's going to shake out, right? Like I do not understand enough of like how the nuances of like those conversations go, of like where they're like trying to land that thing. And like, I would assume you guys are more on the, all right, if it's coming in out of the banking sector, like we got it. And then like, once it's out, it's like good to go. And I can very much see people being like, well, what about all these transactions that happen in the middle? Like, why is that not subject to the same level of like oversight that we would do if it were in a traditional sort of banking side? So that concerns me, is that they'll use it as a way to block some of this stuff. And the problem is it's all dollars at the end of the day. So they do have some jurisdictional ability to sort of like take it on, which concerns me. And this is, I think, why people gravitate sometimes towards Tether, is because they assume, nobody really knows how this is ever going to play out, that Tether is going to be a much more resistant to changes that potentially move it more towards that more heavily regulated side. But like that being said, like they're still dollars at the end of the day. So it's not like they're going to be like on some different, like it's not like their dollars are different than USDC's dollars. So we'll see how all that plays. That's what scares me, is like a user of all these things, is like, how are they going to craft this stuff on it?
Yeah. I mean, there's a lot of industry work happening around that right now, to kind of come up with, kind of technical solutions to how you can deal with things like record keeping on transactions that are happening on public chains, but still enable like the seamlessness of the experience and what you're trying to do. I think, I think that my take is that over time, like jurisdictional arbitrage on like, businesses that intermediate crypto dollars is going to be difficult over time. Which is
it's that like in between zone, right? It's like where you're not big enough, but like you're still trying to. That's like where I think it's like all at risk.
Yeah, I mean, obviously, you take something like Libra, and because the potential systemic scale of it is so large, like it's locked down. I mean, it's basically a lockdown network, right?
Right.
Yeah.
What I think is going to be a very interesting one that's going to butt its head is, so like part of the thing with dollars that like has always stopped dollarization of like other areas has been like you have to get physical currency, right? And like that slows it down. But like if this stuff's all digital and there's just dollars like whipping around, like
absolutely
lower grade currencies are just going to get nuked if this thing gets like enough critical mass. And I'm very curious how like those places are going to react to this stuff.
Well,
like, it's very possible they're like,
Yeah.
no, you can't do this.
Yeah.
Like,
I mean, this is like, I use the analogy of like what happened with over the top is this concept that existed in media and communications on the internet, which is basically like, you know, there used to be all these like regulated firms in every country that would like handled like who could broadcast information, who could publish, who could, intermediate like voice conversations. Like that was a pretty regulated space, very regulated, with big national monopolies, with in some cases like government run infrastructure in lots of places. And then like, boom, software on the internet and everything went over the top, and like anyone can broadcast anywhere, anyone can share information anywhere, anyone can communicate with anyone instantly, peer-to-peer, censorship resistant, all this stuff launched, and kind of the world rolled over, in a sense, like, because people were like, this is just better. I want this. It's better. It's faster. It's cheaper. It's easier. I like it. And like, it was almost impossible for these national governments to say, no, you can't use Skype, or, no, you can't use Twitter. You've had obviously interventions that have happened. You've got, firewalls that are, doing stuff. Is the market moving?
No.
I'm just kidding. I'm joking with you. I was debating with people before we started, like while we were talking, are we going to cross 12,000 and or 425 on Bitcoin, on Ethereum, but I haven't looked. So anyway, in all seriousness, it's like over the top kind of concept, and like digital currency is over the top, right? And this is, this kind of thing where, stable coins like can exist on the internet. And as you said, like if I'm in Zimbabwe or I'm in, Argentina, or I'm, pick your place, it sort of has that kind of power. And, are people just going to vote with their smartphones what economic system they want to participate in a sense, right?
Right. So I don't know. This is all getting out there too, right? Like, it's really just sort of being like, what are the knock-on effects? It's just like money is such a more powerful thing than, not that like media is not a really important thing, but like controlling your money and your sort of ability to like police and or like your currency is such an important part of like you as a nation. Like
fiscal policy, taxation,
everything changes if suddenly you don't really have a handle on it, or you're like stuck using somebody else's and you didn't want to. I don't know how.
But isn't this is like the big long macro thesis on digital currency, which is like this is building a new global economic order that is going to be more global digital currency based.
Right. And is it going to just be dollars, or will it be crypto? Right. This is the other thing. It's like, is it really going to be dollars at the end of the day once everybody has dollars?
Or something synthetic?
Yeah. I don't know. I mean, that's way out there, and it's cool to make those projections. But I think in the short term, you're going to have you're definitely have some resistance.
Yeah, for sure. Well, actually, so just maybe actually in the short term, I think this is one of the things that we're seeing is like big fintechs, big payment companies, banks, other people are basically wading into stablecoins. And so like, one of the really critical things is, and, we had this OCC guidance a couple of weeks ago that said, hey, banks can custody crypto. And that, presumably also includes stablecoins. But we're seeing, sort of this very strong engagement now from, lots of different players in the traditional quote unquote digital payments, fintech, and even banking sector who are like, they're wading into this, and including with things like USDC. Like, what does that look like maybe a year from now, where all of a sudden like these rails are just like connected up and people can use them in kind of more of the mainstream products that they know and love and use today, instead of just like, their crypto wallet that maybe is a little bit more trading focused.
It's going to be great, right? Like if all this stuff is like actually connected and you're like able to like whip like dollars around it, it's going to be so much better. Like the current experience is terrible, right? Like if I got money in Bank of America and like I got to give it to somebody in PayPal, right? It's like, yeah, you can do it, but like it's crappier than it needs to be. And like it's weird, right? Because like it's one of these things that like technology just like never I'm like, why can't I do it? But I can send money from Binance to like KuCoin and like nobody cares. And it's like, why is that so easy? Yet two mega companies that have hundreds of billions in revenue can't, like, I don't know, like it's clearly going to go that way.
We're getting a lot closer.
It's kind of, I mean, there's no chance it doesn't get there. Yeah. It's like who's going to push it so that it becomes like standard and everybody has to have it.
We're working on it.
No, it's going to be so much better. I mean, I say this all the time. I was like, it would be amazing to just have a bank account that was USDC plugged in, right? Like if I could just use my Bank of America account and also like, all right, I got to send 50,000 USDC somewhere, like boom, just like that. Like that would be such a powerful, useful value add.
Maybe you could tap some crypto yields at the same time.
Yeah, and like plug it. I mean, like that's probably like going to take a little more. Like I'm sure they're like risk and compliance guys are going to need like. It took them this long to like get comfy on that side, like let alone like. But
But most young people, like they're, you know, like when you, whatever, demand deposit account, right? You're a grown man with a family, Dan. But most young people with a demand deposit account, that's like Square Cash, Venmo, Revolut, like PayPal, that kind of thing, right? So, you know, the front edge of banking is fintech products, right? And neobank type products, right? Maybe they'll be the first to tip the scales.
That makes sense. I mean, like probably Square's the furthest along.
They're already doing crypto.
Right. They have Bitcoin. You can go in and out. Like it's not much of a leap to go. Well, like how do you go from there to dollars? Conceivably, they've already taken care of the fraud issues on the Bitcoin side. So like dollar stablecoins, not like a ton of difference. Yeah. I mean, that would be good to have them be like the first sort of person to do it. Yeah.
We'll see.
And it'd be useful. It'd be, I would 100% switch all of my banking over to whoever does that.
Well, this ties so tying into like the more like the crypto trading thesis, right? So kind of undergirding all this stuff are like blockchains that can actually like run tokens and smart contracts, and you know that's sort of, you know, part of the like obviously like the ETH growth. There's a lot of things driving that, but like, you know, part of it is like stablecoins are now an actual killer app. Like majority of transactions on chains are stablecoin transactions, and like when you light this stuff up and you just start lighting it up in consumer use cases, like people go, oh, wow, okay, this is consumer scale. Obviously, there's like scalability issues, throughput issues, cost issues, all the stuff that's kind of happening, you know, and there really is like super intense competition for like third generation chains that could actually scale. And, you know, that's obviously a place where people are taking positions. We're doing multi-chain with USDC largely because we see that there's, you know, a lot of innovation happening in terms of like scalability. If you want to have like apps and services that have tens or hundreds of millions of users, like pushing on-chain transactions, like you can't do that on Ethereum today.
Right. Yeah. I mean, it's choking under the current load and stuff's already really expensive. So yeah, I mean, like, I agree. It's unclear if it's going to be like ETH 2.0 whenever and whatever that looks like, or if it's going to be some other second generation higher throughput performant, like
or a multi-chain world, right? So you're going to have like interoperability and have like a standard that works seamlessly across those.
Yeah, I mean, I definitely think it's going to be a multi-world. It's just like it's unlikely that you're going to be able to get everybody to like coagulate around one, like especially because it's so dispersed right now.
Yep. It's definitely our bet. Cool. So I think we're going to run up on time here, but I think, you know, this sort of couple kind of high level things. So like your broader view, like right now as a trader in the crypto markets, like they are their own, it is their own world, right? You've got all these different tokens, you got all these sort of, you know, you can decide what you want about the different projects and the integrity and or quality or meaningful value of those. But like you have this like completely nascent, like pure play digital asset market, but as like a market infrastructure, like we were just talking about, like it's like got huge advantages over what we think of as classic market infrastructure. Do you think this just like, do these merge? Do all financial assets eventually merge into this space? Do they converge over time? Is this like, you know, is the build out that's happening in crypto markets actually like the build out of the new financial markets? Or do you think these are just parallel for a really long time?
I think it would parallel for a really long time. Cause like, I don't think like traditional assets and like settlement and clearing, like you don't think about it, right? Like you don't go and trade a bunch of stocks and then like be like, oh, like where is it posted and like what is the market? Like you just don't. It's just like you push the buttons and it's like done. like it's large. I don't want to say it's a solved problem, but there's not like a pain point there where people are like, well, I need to own my shares of Apple and have them like custody local. Like that's just like not a thing. So I don't see a ton of push from that community to suck in any of the larger sort of thesis that are going on in digital assets. I mean, I see some world way in the future where they're like, this is silly. Why do we have these two things running independently?
Right.
What I think you'll have much more likely is like your interactive broker's account will let you just like deposit USDC, and like that would be a bridge way to come through.
So as a payment settlement medium, that obviously connects first, right?
Yeah, and I think that's going to be it for a while because it's not a pain point for a lot of people for most of the major asset classes. As far as I know, they go on settlement trade. Like there may be portions of it that are just like busted from a back office side, and like they'll pull it in. Like this was the whole enterprise blockchain push of like 4 or 5 years ago, and that may bear fruit for a couple of things. But like in aggregate, I don't think guys are sitting around being like, thank God we can finally use like X blockchain to settle our shares.
Yeah. No, certainly in that realm. I guess the area is like, can you open up liquidity on things that in the past didn't have the option for that, right? I mean, even like today, front page of Wall Street Journal has got like the growth in like essentially fractional buying of shares of Amazon and Tesla opening up on brokerages and stuff, like basically slicing and dicing things in ways that are transmittable, settleable by like a global retail base.
It'd be great. Look, I mean, if you think about it in terms of like the fact that you could open up an asset class to a larger retail worldwide participation, that's monstrous. But there's just regulatory wise, I don't see that like happening anytime soon. I mean, look, we can't even get an ETF, like let alone, like it's just so hostile.
I mean,
vanilla old school products.
Yeah, look, I believe that the inertia of the existing kind of apparatus is very significant. I think there is this sort of interesting phenomenon where basically like the COVID effect, right? There's like this things accelerate in certain areas, like e-commerce just like grew in a quarter like the amount it grew over the last 10 years. Like it was just like crazy, and you see it in all the numbers of like a lot of these players out there. But like do governments say shit, we really need to be at the front edge of like what this next technological shifts are, and we're going to lean into it, and we're going to because we have to, because like that's what companies need to do right now. It's what societies need to do right now. It's sort of like there's a bigger like, we got to stop hanging on to the past and just accelerate, because we got to get to just more efficiency, because that's what happens when you have global depression.
Maybe. I don't really see it in crypto though, right? Like if anything, it's just being ignored. Like people are just stopped talking about Libra, right? Like that conversation just died, and like everybody's like focusing on other stuff from the regulatory side of it. So I don't know. I would say
I'm talking like over like several years here. I'm not talking about anything yet.
I would say if there's anything that is doing that, it's like the fact that China's pushing it forward.
Right.
And like nothing is a better incentive to get your regulatory act together than some other country potentially getting it together. It's like, I think that matters way more.
Yeah.
I don't know. The COVID stuff, like it hasn't seemed that like payments were like a pain point for people, right? Like, so like they even managed to give everybody those checks, right? And like that seemed like an impossible Herculean task at the time. So I don't know. I'm not sure that like that's where they're like trying to push. I think they are looking at it like the whole work from home angle, where they're like, all right, like this is like a thing. How do people do this? Like companies obviously had to deal with that internally. But I don't know. I'm clear that like the payment side was like, all right, we got to like fix this.
Yeah, it's interesting. So maybe to kind of wrap a little bit, like give us your long thesis right now
on stablecoins or on crypto. In crypto, I mean, look, like I'm a believer in the asset class as a whole will grow like over time. I think if you're out there like punching individual bets on like names, like that's probably not a good plan. I think like liquidity will continue to like aggregate towards the largest, most used sort of pieces of the pie. And like, look, there's like clearly demand worldwide for like assets that are like specifically like shielded not only from inflation, but like from their own like governments in some capacity. And I don't see that trend going the other direction anytime soon. I mean, you're seeing like a huge rally in metals too, right? That's not random. I think this like kind of continues going on. And there's a big push from the Fed to like even just change their thought process on inflation entirely. So I don't know. I think this stuff's got a bid in it until like that sort of changes in the world. So yeah, I don't know.
Okay, so 3 years, total market cap of fiat-backed digital dollar stablecoins.
Oh, so what are we at right now? Like, what's the number?
12 billion.
Like, as
12 billion.
12 billion. I think so 3 years, I think you'll crack 50.
Crack 50.
Yeah. But I think at some point, like there's a number, right? There's a number of the dollars in stablecoins that if it like tips, like there's going to be a regulatory conversation. Like if that number I feel like hits like 25, maybe like 30, like there's going to be like, hey, can you pause this for a sec? Like we have to talk about this, you know?
Those conversations are happening.
Yeah, so it's getting there, right? Like, so I think the trend is in that direction, but like I am also like cognizant of this isn't going to just be like a like straight line. Like there's going to be some like things in between.
So how long until it's $1 trillion in stablecoins?
Well, $1 trillion is a lot, right? How much cash is there even in the U.S. system?
Well, you have cash, but you also have like, you know, money markets. Global money markets are at what, 5 trillion?
I think you got 10 years for $1 trillion.
10 years for $1 trillion. All right, I'm going to stick around for that.
Yeah, I mean it's not that long in the scheme of things, right? Like Bitcoin's only got 10 years on it.
We've been at this 7-8 years, so
I'll give you 10 years on that. That's okay. That's a lot of value.
Yeah, we'll see. I think it's faster.
Hey, I'd love to be proved wrong.
Awesome, Dan. Such an awesome conversation. So great to have you, hanging out here today. Thank you.
Yeah, thanks for having me.
Yeah, absolutely. So some awesome perspective from Dan. Really, obviously, just an incredible view on the history of all this and what's going on and where it's going. Next week, we're going to turn our attention back to this sort of rising role. A lot of what we talked about here, this rising role of digital dollar stablecoins in the mainstream financial system. So several weeks ago, as mentioned, the acting head of the OCC, the largest regulator of national banks in the United States, Brian Brooks, issued guidance that said that banks, national banks in the United States could hold in custody cryptocurrency, crypto assets on behalf of their customers. Question I'm asking is, what might this mean for banks and financial institutions adopting stablecoins? So next week, very excited to have as a special guest, Brian Brooks, to talk about the role of the digital dollar and digital dollar stablecoins in the US financial system. We're going to get his view on the latest OCC guidance and what this means for crypto dollars in the banking system, how stablecoins can drive core payment system innovation in the US and globally. Till next time, stay well, stay safe, and stay informed. Thank you.